Professor Hoon and Teck.
Mr. Speaker, sir, at one level, this bill simply seeks to address a technical issue to provide an alternative mechanism for the Monetary Authority of Singapore, MAS, to transfer to the government the excess of official foreign reserves, OFR, above the level that is required for it to perform its function of carrying out an exchange rate-centered monetary policy to achieve price stability over the medium term. The OFR that are transferred to the government is for long-term management by the GIC. Currently, transfers of MAS OFR are mediated through a corresponding reduction in the government's cash deposits held at the MAS. However, with smaller fiscal balances in recent years, leading to a situation where the government's cash deposits are not growing as rapidly as the MAS accumulation of OFR, the current mechanism for transfer faces a constraint. The new mechanism proposed under the amendment bill overcomes this constraint by providing for the transfer of MAS OFR through a subscription to the Reserves Management Government Securities, RMGS, issued by the government. Two questions arise. What has caused the MAS to systematically accumulate OFR over these decades? How do we prevent the perception that the new mechanism offers the government the means to conduct money finance fiscal policy? On the first question, Singapore's high private savings rate, alongside the constitutional requirement that the government must achieve at least budget balance over its term of office, has meant that the country's holdings of net foreign assets, that's the excess of our gross assets over our gross liabilities, have steadily increased over the years. When the government does run a budget surplus over its term of office, which it has, the public saving augments the stock of reserves and boosts the country's net foreign assets. Net foreign assets denominated in foreign currency, such as the US dollar, has higher real purchasing power when measured in terms of domestic GDP, because some of the goods and services consumed by Singaporeans are non-traded. And in the classroom, we give the favorite example of haircuts. Transport costs are too high to make it worthwhile to travel to another country to get a haircut, so haircuts become a non-tradable activity. Through this channel, an increase in net foreign assets tends to be associated in statistical analysis with a depreciation of the real effective exchange rate. So there's the nominal effective exchange rate of the Sing dollar, is how many Sing dollar to buy a US dollar in the foreign exchange market. And then there's the real effective exchange rate, which really measures Singapore's general price level relative to the general price level of its trading partners when measured in the same currency. So when Singapore's cost of living goes up, we have a real exchange rate appreciation. Correspondingly, when things are cheaper in Singapore, because haircuts are not tradable, we have a real exchange rate depreciation. Now, the channel I just referred to suggests that what you might call the valuation effect tends to be negatively associated with our net foreign assets. Other channels, such as more rapid productivity growth in the manufacturing sector compared to the productivity growth in the non-traded goods sector, might exert pressures for a real exchange rate appreciation. So if you have the manufacturing sector able to robotize, etc., and its productivity goes up, whereas the non-traded sector, a part of the retail sector, which largely be selling to only domestic customers, and their productivity is not growing as much, then the fact that the manufacturing sector is experiencing higher productivity growth will push up the wage rate. But workers are free to move in their job between the factory and in the retail sector. So there's an upward pressure in the retail sector that's non-traded also to pay as higher wage, but its productivity has not gone up. So unit labor cost goes up, and therefore the non-traded good price tends to go up. And for that reason, this channel leads to a real exchange rate appreciation. Another channel that can cause a real exchange rate appreciation is the rise of domestic investment, because a part of investment such as building infrastructure tends to be non-tradable. And that rise in domestic investment also tends to raise the real effective exchange rate. That is a real appreciation. So there are all these factors that can cause the real exchange rate to go up or to go down. Broadly speaking, a statistical analysis done with data from 1983 quarterly to 2018 has shown that, largely speaking, around about 85, which is when Singapore experienced its recession, the real exchange rate was high. In other words, high appreciation. It somewhat declined down to the early 90s and then began to rise again until the Asian financial crisis, came down again round to about 2005, and since then has been rising. Nevertheless, despite these forces that I just mentioned that can cause real exchange rate appreciation or depreciation, with Singapore experiencing steady capital inflows alluded to by Minister for Finance, including short-term capital inflows, this has meant that the nominal effective exchange rate of the Singapore dollar has faced upward pressure to appreciate beyond the equilibrium real effective exchange rate. In other words, in the absence of the MAS intervention in the foreign exchange market, the Singapore dollar would tend to become overvalued. In accordance with the MAS exchange rate monetary policy framework, its intervention in the foreign exchange market to dampen these pressures and keep the nominal effective exchange rate of the Singapore dollar within the policy band. And conceptually, that means trying to aim for what you think is the equilibrium real exchange rate, has led to a steady accumulation of OFR. On to the second question. The explanatory brief put up by the MAS at the first reading of the amendment bill has been at pains to make clear that there are safeguards to ensure that the new mechanism to be put in place does not lead to de facto money finance fiscal policy, that is, to let the central bank lend money to the government to finance its spending and fiscal deficits. First, the amendment bill requires that MAS can subscribe to RMGS solely for the purpose of facilitating the transfer of OFR, and that its subscription does not compromise MAS' ability to achieve medium-term price stability. Second, MAS will only be able to use its foreign currency asset to subscribe to RMGS. In other words, RMGS cannot be used as a tool to print money to pay for government spending. The safeguards in the MAS amendment bill will complement the existing safeguard in the Government Security Act, under which the government proceeds from borrowing can only be used for investment and market development purposes. Mr. Speaker, sir, the theory of economic policy suggests that there should be as many policy instruments as there are economic objectives, and the application of the policy instruments to achieve these objectives should be based on their comparative advantage. Our being a small open economy means that the management of the nominal exchange rate, I think that was very much in the thought of Dr. Goh Keng Swee, serves well the purpose of achieving medium-term price stability. And we have that record to show for it, because other than the spike of inflation in 73 and a smaller spike in 79 during the oil crisis, we largely have maintained very stable inflation rate below 2% per annum. Structural policy, such as the implementation of industry transformation maps, helps to raise the economy's underlying rate of productivity growth. This, in turn, contributes to growth of national income as a mature economy, because as a mature economy, it's not going to be capital deepening that will raise the standard of living. A large part of what will contribute to our steady growth of income will have to come from productivity growth. But with the growth of national income, we have an expansion of the tax base. Fiscal policy in setting the tax subsidy structure contributes to economic inclusion. So, painting with a broad brush, we have three economic objectives: maintaining medium-term price stability, achieving an underlying economy-wide productivity growth, and facilitating economic inclusion with an assignment of three policy instruments: an exchange rate-centered monetary policy, structural policy, and fiscal policy, respectively. With this policy mix, we can continue to exercise fiscal prudence, ensuring that we have the fiscal resources to pay for our recurrent spending, and thus free the MAS to focus on its function of maintaining medium-term price stability without facing the pressure of monetary financing. Sir, I support the amendment bill.